Yeah, crude has been quite interesting because when you look at both contracts, the WTI and the Brent, Brent's certainly been trading in quite a narrow range. The situation in the Balkans obviously has seen a little bit more of a risk-on trade. As a result of that, crude sort of had a good lift. But the numbers, the unemployment numbers that came out in the States on Friday night gave it a further lift as people thought that the recovery was certainly getting a little bit more steam. So we are reaching the top end of the range in my view. Let's see how it goes, but I think these levels are levels which should be sold into. Look, this is quite interesting because the volatility we're seeing in natural gas has been seasonal, but it's been seasons which we're unaccustomed to. Those series of cold weather fronts that have come through has actually seen obviously a lot more demand. Remember, over 50% of Americans use natural gas for heating. So one would expect that as conditions become normal, that the price of natural gas should actually come under pressure. So in my mind, any rally on that should see it come under pressure, but I think it'll only come back to a good level from which we can start to buy, because there is this movement towards natural gas as an alternative energy. So gone are the days of the major lows, but I think given that we're moving into the warmer period of the year, that I think that natural gas will continue to be volatile and volatile towards the downside. Well, gold has sort of certainly received more of a lift for most of this year, I guess, but we're coming into some resistance around that 1350 level. Given the supply and demand trends that we had certainly at the end of 2013 and early 2014, I'd probably anticipate that demand will continue for the metal, particularly that demand out of Asia. So I see dips on gold to be well supported. I am angling for a break through that 1350 level. If I can get that 1350 broken on a daily, then I think we're into a new and higher range. But at the moment, I think a little bit more consolidation, but a buy on dip stance is where I stand. Look, the base metals have been quite volatile. When you look at the two, I guess, bellwethers there, demand and what's happening on the political front, you can see that copper's been heavily sold off on the back of Chinese data, whereas nickel's reached a 9-month high, purely on the back of geopolitical concerns in Russia and Indonesia. So when you look at the plays, it is quite interesting. Copper, in my mind, given the continual weakness of the recovery in China, may have more to fall. When you look at nickel, on the other hand, I think nickel perhaps has more to rise because I see something more happening out of the Balkans issue. I see that as an ongoing concern that should keep prices relatively well bid. Also, the concerns obviously in Indonesia will certainly keep prices well bid as well. Yeah, when we're looking at, I guess, the soft market, it is quite interesting because we're seeing a lot of volatility. When you look at wheat, you look at corn, you also look at coffee. So there's certainly lots of volatility there at the moment. I'm still looking at the issues in the Balkans, also the drought in Brazil as major trigger points for the wheat and corn markets. So I see them continuing to be well bid, in particular wheat, which I think has got another 25% rally on the top side.